Hi, welcome to the Market Alert for Thursday, the 27th of September 2018. So the pound was sideways yesterday, waiting for the FOMC market minutes, which showed the rate increasing to 2.25 from 2.0. So once again, rates moving higher, more or less 100% guaranteed across the board. So no surprise there. Also a bit of dollar weakness to begin with as the pound moved higher, and then this started to move lower. And on the overnight, you can see the prices are moving to the downside. No surprise there, as we looked yesterday at the dollar index, as prices were showing support, and we can expect the pound to head back south, trading up to the 132.12 level yesterday. Closed below the 20 bar. 50 bar is required now to see prices move down and trade towards the 76% retracement area. There is a 76% retracement in between this, which is from this low and the overnight high. I don't think that's actually latched onto it because no, it's not. I can't use that. The software won't actually allow me to draw to the current bar, which is a shame because there is a 76% retracement. I'll just show you where it will be manually. It's going to be in this area, and then we've got the low as well, which coincides with the market breaking the 20 bar average. So let me just pop this in there. So between the current price and the 130.55, we're looking for the market to find some sort of support. If not, it breaks this, then back to that 130 level. 130 is being crucial, so keep an eye on this level. News for today, what have we got? We're looking at high impacts. Core durable goods US at 130. And then we've got Super Mario out and Powell both later today. We've started off with 230 for Draghi and 930 for Powell after the market is closed. It's probably the first Fed chairman who I've actually never seen. What I mean by this is you just don't see him on the TV or anywhere. He doesn't feature anywhere. He just goes back into his office, shuts the door, and nobody actually hears from him until they have an FOMC meeting. It's most unusual, unlike Yellen Bernanke. I mean, gosh, he was a Fed prostitute. He was everywhere he was. It was just unbelievable. Whereas Powell, absolutely nowhere to be seen, which is quite something, actually. He's keeping his head below the parapet, for sure. In the Dow yesterday, the market sideways. You can see the range there, just breaking above before the minutes, and then when they were released, the interest rates were increased. The market started to move higher and then sold off towards the close, and then just after the close, big sell-off in the Dow, dropping 150 points. So the weakness in, and on the overnight, this continuing as well. So in the daily chart, this is what it looks like. And what we'll do here is this. We'll draw in from this low to this high. We've got 76% retracement area there, 26,151. The market needs to find some support here if it is to move higher. I'm just going to remove this 76% retracement. And what I'm going to do is this. What we need to see in this market to verify if it's got any upside potential is to go from the high down to this low. Now if this is breached today, then we'll redraw this, but what we're looking for is the market to fail at this level and then go south as we head into October. So this is an interesting area. The market failing to hold yesterday on the interest rate rise. I mean, as interest rates go up, then stock markets generally go down, but not at 2.25%. That would, you're still going to get more than that with good investment in the stock market. However, it comes with a caveat: stocks are overvalued, seriously overvalued. So you could end up with a negative on the portfolio in the stock market and be glad of 2.25 with the Fed funds rate. Even though it doesn't seem a lot, the risk is less given the how high the stock market is and also the valuations. So watch for this sort of thing, market rallying and then failing to hold, and also keep an eye on the 20-bar moving average, which this market has managed to always trade back above, and also the 50 as well. And finally, nothing to report in Bitcoin. Very sideways yesterday, an inside bar, market higher as forecast off the volume that we saw, but looking very, very quiet indeed. That's all I can say with regards to this. There's nothing happening there, so there's no point in going into too much detail. Okay, that will do it for this one. Keep an eye on the Dow, see if we can get a bit of a rally up to the 76% retracement. Certainly the south for the Dow, with interest rates rising, is positive for the dollar. So any bounce in the 15-minute to any of the pivots and averages, psychological lines, will give a potential sell signal. Okay, that's it for this one. If there's anything to report, I will let you know. But other than that, as ever, thanks for watching. See you in the next one.